Hello and welcome back to Mentored, the podcast where we do business mentoring in real time. If this sounds bad today, audio quality, we had a little bit of technical difficulties. We're working on it. Also, another note is it will not have seemed like much time has passed since the last episode, but it's actually been in basically about a year.
Yeah.
We shot 10 test episodes about a year ago.
Yeah.
And now we've refined everything that we wanted to refine, and we're getting back into it. So we haven't even announced the podcast exists yet as of this recording, and we are going to be putting them out weekly. So you actually, to you, the listener, it won't matter, but just a little. I think you're not supposed to do behind the scenes stuff like that.
Well, we're different.
But this is a little look behind the looking glass. So hi, Alyssa.
Hello, Willows.
And
my mentor.
What do you need mentorship on with today?
Okay, wow. It's been a year. Lots has happened. Very busy. Bakery's going crazy right now.
That's good. Your bakery.
Which is great. So I'm thinking we jump into everyone's favorite legal stuff.
Oh, perfect.
Wow. Which is exactly what I wrote down, was legal stuff. Wow. Tell me your thoughts on incorporating your business. Incorporation as a whole.
Okay. So this is, I don't know if we had an argument. It wasn't really an argument or discussion, but it was just I opened my first business, and actually everyone since then, but we incorporated before we even started selling. And then so for the American listeners, I know they have LLCs, which is kind of an in-between between a sole proprietorship and a corporation. We don't have anything like that in Canada, so it's just sole proprietorship, partnership, and corporation. So for intents and purposes, you could also see this as an LLC conversation, just because I know a lot of our 60% of our listeners are American. So
yeah, I'm glad you said that, because I was also gonna mention is we're in Manitoba, Canada, so I know there's for us it's sole proprietorship or a partnership, which is you could probably explain it better than me.
Yeah, that's if you own the business, but you file on your taxes, basically your personal taxes.
Yeah.
And then the corporation is that, and you're personally liable and everything for the business,
which is what we started with.
Yeah. Corporation is that you don't really have liability for the business personally. That's a different conversation. And then the corporation is its own entity, its own person, and it files its taxes separately, basically. So those are the main differences.
Yeah.
So every business I have had has been incorporated from day one, but I know a lot of the people that we talk to, that we do business with, we both do a lot of farmers markets. We know a lot of small business people, under, $50,000 a year of revenue, don't like to get incorporated because they think it costs too much.
Yeah.
Right.
Which is, that's where I started, I think.
Yeah.
The progression of the business has been kind of funny, because it's we started sole proprietorship, we did that for a year, and then the next year partnership, did that for a year, and now we're moving into our third year, and we're okay, incorporation.
Yeah. So I think what the catalyst was when you were finally I should incorporate was when you got your personal tax bill.
Pain.
Yeah. So your company did just shy of $100,000 in revenue, and that all got added to your personal income tax.
Yeah.
Yeah.
half of it.
Right, because you're a partnership.
Yeah.
But
after all of our expenses, we did buy some things. These will be in future episodes, so stay tuned.
Yeah.
But yeah, so it got me thinking about that. We've had conversations about it, and I know how you feel about it. But
yeah, I think first and foremost, the tax differences are immense.
Yeah.
Corporate tax rates, I think, in basically every country that you live that exists with a developed Western economy, corporate tax rates are typically significantly lower than if a human being was making the same amount of earned income.
Right.
Especially with in those ranges of like over 60 grand. I think it's pretty universal. You would save a lot, like if you're making $30,000 in sales, you'd probably save a lot by being a sole proprietorship, because you're not paying many personal income taxes, but those tax rates start going up fast for individuals and less so for corporations. For instance, if you're a small corporation in Canada, I think it's under like $5 million of profit, which is insane. Which is a lot of money, obviously. You're at a lower rate, and then it only bumps up when you're like more than $5 million of profit in a year, something stupid.
Crazy to think.
It might, even if it's much, I might be misremembering, but I think even if it's much lower than that, it's still like 500K plus of profit, not of not of revenue. So it's like a lot of money left over before you jump up. So the corporate tax rate that like we're both in is like 10% or something. Because there's like a federal corporate tax rate, but then you get like rebates if you're like a small business, like the province pays for that or whatever. So you just need to be like a Canadian controlled small business, and then you're like the tax rates are very low. So that's first and foremost is the taxes. Then we also talked about there's a lot of grants and stuff available, especially for manufacturing, because the country wants to get domestic manufacturing and whatnot. So there's a lot of like and we're both in like agriculture adjacent businesses. There's a lot of grants out there because like we've gotten tens of thousands of dollars of free money from provincial government for different things.
And is that like you have to be incorporated?
Yes. Yeah.
Oh, I did not know that.
Yeah.
That's crazy.
For the most part, the ones that we were applying for, at least, they won't give it to sole proprietorships.
Wow.
Yeah.
I guess that kind of makes sense.
Yeah, I think they do, because I think it reduces fraud as well. Like if just random people can't apply for stuff, like, so I'm sure there's a lot of reasons, but the ones that we looked at, they were specifically like you need to be incorporated to receive them. So that's another benefit. Also just like tax credits and whatnot, a lot of them you need to be incorporated to do properly. I know makes sense. Yeah, all the manufacturing tax credits and stuff, I think that like my accountant, I remember, was telling me that we couldn't apply for if we were a partnership still. And then just the as we get bigger, all my businesses, the liability thing starts becoming more relevant. Right. It's never been an issue, knock on wood, but if you're a sole proprietorship or a partnership and you're a bakery, someone chokes on your bread, even if you choked on bread, that's not my fault, they can still sue you for having dangerous bread or whatever, right? And if you're a sole proprietorship or a partnership, they'll be suing you directly, right, rather than suing the corporation that you happen to be chairman of the board and majority shareholder. So if there ever is a court judgment against your corporation, obviously that would be, now we're in the situation where if one of our corporations goes out of business, we're probably just declaring personal bankruptcy anyway, because it's like such a big part of our income. But there's hypothetical situations where you can just, the corporation gets found guilty, the penalty gets against it can't pay it goes bankrupt, and then you're fine. Right. Yeah. So there's a liability aspect there. And then also as I get kind of older, just like everything being more modular, like, because I own 3 businesses that I run full time, and it's like,
wait, is that a spoiler?
I don't think so.
Do they know?
They know.
He's a third business now.
But I have 3 businesses, and if they were all getting like run through the same corporation, or even just like my sole proprietorship, like that would be so annoying. Yeah. So it's nice to have like 3 sets of books, and maybe
keep them separate.
Yeah, exactly. Just keeping everything separate, and maybe like if you had asked me 10 years ago, maybe I would have wanted the, whatever I pay my accountant every year to file those taxes, $2,000 a year or whatever. I probably would have wanted that more than now. It's like, it's a better peace of mind to have everything just like separate and like its own entities and everything. Yeah. I think that makes a lot more sense. For accounting purposes and like spending less time, like just simplifying everything. So
that makes sense.
Yeah. So those are my pros, I would say. And then like the only negative really the only con I can think of is just the money, I think.
Right, because it's very lawyer heavy.
Yeah, you got to pay lawyers or accountants to set up a corporation. Lawyers mainly.
Yeah.
My lawyers have now set up 3 of my corporations, and it's very interesting. They have like what they call like shelf corporations. So they've just like incorporated 1,000 businesses, like numbered companies, and then when I want one, they just like transfer it over to me.
That's
So
so
you don't have to wait the like 3 weeks for the company's office to like send you paperwork. They can just like do it in 24 hours. They can just like shift the company over to my ownership. Crazy. Yeah, it's very interesting. But they do charge, $1,000 to do that or whatever, right? And for a lot of people, not to disparage small business people or anything like that, but it's like that could be a significant part of their income. If they're making 20 grand in a year in sales, it's like that's 5% of their income there. Right?
I mean, I think of like because if I would have done this year 1, like just our revenue alone, it was like just over $9,000.
Yeah.
So like, yeah, that comparatively makes a lot more sense. But yeah, I can't even imagine.
But then I wonder, like the 9,000 year notwithstanding.
That was like year 1.
Yeah. But like I almost certainly you paid more in personal income tax year 2 than you would have incorporating if you had just done it.
100%.
Yeah. So that's what I'm saying.
I wish I would have moved it. Like, yeah.
And I think people,
hindsight 2020.
Of course, hindsight 2020. But I think people don't do the math. They see the like big bill up front, and they don't realize how much they're paying on the back end.
Yeah.
Yeah.
I mean, I have no idea. I'm gonna sound like the worst business owner. But it's like I had no idea how taxes really worked.
I barely know how they work now.
Well, now I can pay someone at least who can tell me how it works.
Yeah.
But yeah, no, back then there's just like no way.
Yeah.
So I'm like, obviously, yeah. If I go back, would I change it? Probably. Maybe year 2 I would, because like I'm still paying the CRA, unfortunately. They are on me for that. I find it very interesting. Like I didn't realize how this will be the first year now where we're going to be filing with like as like a corporation, so I'm very excited to see how that looks. But on that note, just kind of speeding through this a little bit, what's your take on shareholders agreements in like the lawyer, since we're in the lawyer realm of this? Yeah,
very pro shareholders agreement, even if it's like a boilerplate one. For context, if you're not aware, most corporations have what's called a shareholders agreement, which just kind of outlines the responsibilities of each shareholder. And more, I think most importantly probably is you usually outline like the exits of the corporation. Okay. So my lawyers told me, and what I have in all 3 corporations, I have the same business partner in all 3, is what's called a shotgun clause, where if either of us ever wants out of the business, the other person has to buy you out, basically. So, how it's set up is, I say, I don't want to, I can't, we're irreconcilable. We can't, like, we need to not be partners anymore. I either want you out of the business or I'm leaving the business. So basically, whoever that person is that wants to like initiate it, they have to say a number first, like, whatever it is, $500,000. That's what you have to buy me out for. And then if the other person says no, then you have to buy them out for that number.
Oh, I see.
So it's that prevents you from being fair, like, you have to pay me $500 million or, because I want out.
Or else.
Yeah. So then if you say no, then you have to pay them $500 million for the business. Yeah. So it keeps you, it keeps both parties not valuing the business more than they actually think the business is valued. Which
makes sense.
Yeah.
Yeah.
So
that sounds like it keeps it fair.
Yeah. Yeah. So we have that clause. I think we also, it's been a while since I've read my shareholders agreement, but I think we have like an adjudication thing where like either of us can like require the corporation pay a certain amount of hours for a third party adjudicator to like go over disagreements if, if we want. It's like there's a cap, like the corporation can spend up to $1,000 a year paying a third party person to work out a problem or something like that. Like there's different little clauses like that.
Okay.
And obviously that gets more complex the more shareholders you have. With two people, just with my partner and I, it's not that big a deal. But the more shareholders, the more complex it gets.
Right.
And then I think you're supposed to, or ours does at least, kind of outlines just here are the general responsibilities, and then what's called fiduciary duty, where you have a duty to your corporation. You kind of outline what that means for this corporation and whatnot. So,
Interesting.
and then I'll leave you with the thing that my lawyer said is always get a shareholders agreement when you're on good terms, not when you're on bad terms, because you don't want to negotiate that when you're on bad terms.
Yeah.
It's kind of like a prenuptial agreement. Like, get it all out while you're on good terms, because then if the worst happens,
then there's already things you've agreed upon.
yeah, exactly. And it's not even just to protect you. Like, if you're comparing it to a prenup, it's not just protecting the two of you, shareholders or more, whatever. It's also protecting the corporation.
Right.
Because that's something else my lawyer tells me all the time is, remember, gents, he always calls us, remember, gents, I am the corporation's lawyer. I'm not your personal lawyer. I am doing what's best for the corporation.
Right.
And, with a business as small as mine, that 100% of the time lines up to the interests of me and my business partner. But he's like, any of these things that we're signing, you're allowed to hire another lawyer to look it over, because I'm making the best decision for the business, not for you guys.
Interesting.
Yeah.
Which I guess it makes sense, because it's like its own separate
Well, a corporation is its own entity. Yeah.
Like you guys work for the...
Yes, technically I work for the corporation, and I'm a shareholder of the corporation.
Interesting.
Yeah.
So there's like a million different ways you can do it, basically. Like it's like however many, like, because you like name your example, right? But from like my understanding is that you can decide with your partner how you kind of want it to look. You can structure it any which way, and then they can just draw up however legal terms. Yeah,
a corporation, like an incorporation document and a shareholder agreement, all of that you can make up anything you want.
Right.
There's no laws protecting like corporations really, because it's like it's not that there's consumer protection laws. So you can do basically anything you want in contracts and contract law and whatever. That being said, we didn't have a shareholders agreement for the first like 3 years of the operation, basically until the corporation was profitable.
That makes sense.
Because realistically, if there was any disagreement or everything, the corporation's not worth any money anyway. So it's like whatever.
Go through all that hassle and
right. So it's like it didn't really matter, because if we were gonna fail and not work in the first 3 years or whatever, it wasn't going to work anyway. So it's like whatever, right?
Yeah.
But it becomes more important, much more important, when the company gets bigger, you have more employees, and it's like operating more independently from the founders.
Okay.
Because if you don't want to implode the whole corporation because you have a disagreement with your business partner.
Right.
And then like, in my case, I have 7-8 people that can't pay rent and buy groceries anymore because me and my business partner had an argument, you know what I mean? So a lot of times the shareholders agreement is also in place to keep the corporation protected.
Right.
Yeah.
Hold you guys accountable.
Yeah, exactly.
So I guess like closing notes then for my situation, okay, my business with my sister, in my head, I'm gonna like knock on wood, because obviously I feel like we're like a different case. Like I don't know if I would work with family for everything, but like me and her work together very well, so it's something that I've like considered, but I've not really been like, I feel like we need this just in case. But what's your advice for me? Like, what kind of agreement do you think I should have with her, if any?
I'll repeat that I think you should do it when you're on better terms than, not saying that you would ever be on bad terms, but just, for peace of mind.
Yeah.
I still think your corporation, like you're in a, you're in a spot where if either of you gave up on it now or didn't want to be partners anymore, I don't know if it would continue at all.
Yeah, that's
right.
100%.
So a lot of, at least the termination clauses that we have in our partnership agreement is like, what happens to the corporation when one of the partners leaves, how
Right.
does it carry on? But if it like isn't going to carry on at all,
Yeah,
it
then
might
what?
not be necessary. So I would just like, I think it'd be something that I would keep in my mind, even if you like, I don't know if I can recommend this. I was gonna say, even if you like get ChatGPT to make one and just sign
We
it
get canceled.
and yeah, and just sign it just to have like just to like outline your responsibilities and what would happen and that kind of stuff. And then when you get when you get a little bit bigger,
Yeah.
bring it to the lawyer and be like, okay, this is kind of what this is just ChatGPT, but this is the idea. This is the things that we want to do. Can you make a good one, basically?
Right. Because it's like, I mean, if we sign something, it's technically legally
Yeah. Oh, yeah.
binding,
Yeah.
right?
If
I'm getting that
there's
right.
yes, yeah, there's court cases in Canada where people have written like a contract on a napkin in a bar and it's been found legally binding. Like
crazy.
it's if you write a contract with the person, you got to honor that contract.
Right,
So
yeah.
yeah, anything you make and sign and you both agree to, like yeah, you would just get it like get a witness or something, because then like you don't want one of you being like, no, we never did that. That doesn't
Yeah,
exist, right?
this is
See, the
forged.
thing, my lawyer has it on file, so if it ever, it's like we'd have to break into this law office and some heist and destroy it if you know
Right,
what
yeah,
I mean.
it's
But
a big thing.
I guess like where I'm coming from is like you gotta balance. I think like in the startup phase, you should just be really focused on growing the business. This
Yeah.
kind of stuff, I don't know if you need to worry about as much,
It's like kind of secondary.
but it's kind of a it's one of those things growing that I think your kind of head should be on and you should start thinking about. But in your situation, I might do another year. Really smash that 100K mark and start growing. You're talking about hiring an employee this summer coming up
Yes,
in
yeah.
3-4 months. So maybe like kind of get all that stuff done and then reevaluate. But I think it should be something that you kind of have in your head, so it doesn't like when you bring it up with your business partner or whatever, it doesn't like blindside her that you want to do.
Right, yeah.
Just like like I guess bringing up a prenup 3 years into the marriage kind of thing. Like you want to
Yeah.
yeah.
It's like, why are you saying this?
Yeah, exactly. So it's just like just outline everything and just be transparent about it. But I think in your case, if I was in your shoes, I would be grinding it out more than worrying about that.
Fair.
But I think it is something important that you should be thinking about.
All right. Well, I think that's all I had for you today then.
Okay, well, it's nice to be back, and we're going to start releasing episodes more frequently.
I'm excited. I have so much to talk about, so
Good. All right.
thanks. Is this new?
No, we did that every single episode.
Did we?
Yeah.
Oh my god, it's been a year. Bye.
Bye.